What's up guys, welcome back to Squid Traders. Today I'm breaking down a clean $5,000 London session trade across my TopStep accounts. No hype, no guessing, just structure and execution. The setup came from a 2-minute break block and the exit was managed by 5-minute acceleration gaps. This is a perfect example of what happens when you stop forcing trades during Asia, let London build liquidity and then strike when the displacement confirms it. Before we jump in, here's the TopStep dashboard. 5 accounts, total around $5,000 logged in for this single setup. Nothing extreme, one clean model, traded across multiple accounts, all following the same structure. That's what real consistency looks like. No overtrading, just repeating precision. Alright, now let's start off with the context. On the daily chart, we got rejected from the daily fair value gap right over here and closed lower. Today's open was gap down. And that basically showed us that the price will go towards previous day low. But when? By the time I woke up, previous day low was already being swept. So I had to play and try to find the next liquidity that price would go towards. And what was that? It was the Tuesday low. When I came into my trading day, the price was already close to sweeping previous day low. So I went down to 15-minute chart and started to see where we were. We were trying to retest this fair value gap right here. And a clean rejection of the fair value gap gave me an instinct that the price wants to head down lower. Going down to the 5-minute chart, I could see that there were two back-to-back fair value gaps that were formed after the rejection. So once these back-to-back fair value gaps were measured, the measured move was to 200 to 250% and 400 to 450% down here. So I was like, okay, this looks good. And price started to go up and basically inverted these two fair value gaps. This gave me an indication that the market might want to go higher, and I did take a long. I did enter a long position once this fair value gap was inverted, but I was stopped out, which is fine. Being stopped out is not the problem. What matters is, can you change your bias quickly? Can you get into another trade where the market wants to go towards? And I went down to the 2-minute time frame to find my entry. My entry was again very simple. What was the last order block that swept the liquidity of the buy side liquidity? It was this order block. Once I have identified the order block, all I want is the price to either take support on the order block and start creating new highs. If that happens, we go for a long. But if the price goes below the order block, converts it into a breaker block, that is a signal for short. Normally, I would go for a 2-hour on this trade. And once price basically came below, I went short and I was like, okay, where can this market head towards? As we saw on the 5-minute, the initial targets were 200%, 250%, then 400%, 450%. These targets were met quite quickly and I made an open TP after that. And where did my final target come from? Was the extension from these two fair value gaps that were formed on 5 minutes. 200%, 250%, 400%, 450%, all achieved. A single trade, more than 6 hours. The key lesson here, nothing about this was fast. London had built liquidity first. The breaker had to confirm. Acceleration gaps had to open up. Most traders blow their session waiting for the perfect entry before structure is even ready. But the market doesn't pay speed, it pays timing. This trade proves it. Breaker, displacement, acceleration. That's London's blueprint. So that's the full breakdown. One structured London session move, $5,000 realized, trade calmly across TopStep accounts. If you want me to do a replay of this 2-minute entry candle by candle and walk through how acceleration gaps formed live, drop a comment. I'll post it in the next video. Stay patient, stay structured. Trade narrative, not noise.